Morning, guys. Just want to give you guys a quick little weekly review. So as always, I'm going to start on the economic calendar. So just looking at red and orange news days, we have news on Tuesday, Wednesday, Thursday, and Friday. And we don't have anything on Monday, but since I've been trading Silver Bullet, we're doing a little bit of research on the yellow folders. For example, next week we only have one orange folder, but if I click on yellow, we suddenly have a full week of trading. So just a little bit of research on that. So this week we have a full trading week. So I've been trading the Silver Bullet 10 to 11 or 2 to 3 p.m. There's a tweet that ICT has, and it says weekly drawn liquidity, economic calendar day, liquidity sweep, find the fair value gap in the direction of the weekly drawn liquidity, and then ideally enter in those hours using an entry model. And my entry model is the 2022 model. So that tweet has been making me backtest the economic calendar days, like flipping on the yellow folders as well. So I'll show you Monday and what that looks like. So here is Monday. So I'm drawing previous day high, previous day low, and then coming into Monday we make a new low. Just like that. And since the first window I'm interested in is the 10 o'clock H1 candle, so I can draw that high. So this is what the hourly chart looks like coming into our silver bullet window here, right here. And I'll drop down to my second intermediate time frame, 15-minute, to refine. And as you can see, if we go on Monday, we have this gap down into that hourly sell side here. And then we start to dig into this opening range gap. So gap down 930 into this sell side here. And then I'm waiting for 10 o'clock. Notice all the wicks, they're doing the damage here. And I'll drop down to a 5-minute. And I had a discovery this week on how to refine my entries and using the 2022 model. So notice here we sweep this low, and then we're looking for a market structure shift with a fair value gap to define 2022 model. So as you can see, from that low to that high, this gap here is nowhere near 50%. But notice how from that low to that high, we come down into a discount of that range. And then that's when I'll drop down to the 3-minute, 2-minute, 1-minute to refine. So here is that same leg, and I can refine it to that. And notice how there is 3 fair value gaps. Whenever there's 3 fair value gaps, usually you can put your stop at the second candle instead of down here, because it's not going to use this whole order block. So you enter here, target the edge of the leg, go to the M15, target the edge of the leg or the next M15 buy side. So nice little trade there. And whenever I get a trade in the morning like this, I'm not really interested in the afternoon. So I'll get rid of that. Now here's where it gets fun because we had CPI, the red news days here, Tuesday and Wednesday. So that's going to be the bulk of the weekly range. And as we come into Tuesday, since I'm trading 10 to 11, I can always see the opening range gap. Here we gap up. So I'll draw yesterday's close to today's open. Similar to how I have all these. So we come down, touch the 0.5. Right here, we're coming down, touching the 0.5 in here. However, we're above midnight, and this just looked like a beautiful short, and we had 10 o'clock red news. So I took this short here, and I was targeting this BISI here in discount. So it looked like that. And then that's when I shifted my gears when we started, the body started respecting the midpoint of the opening range gap, and then we started to play displacing higher. And remember what I just told you on the Monday's trade, low to high, this gap's nowhere near discount. That's when I'll drop down to a 3-minute. And in this leg, you can see we can raise this leg here to that, to fair value gap. So my stop has to go under the first low, and then we target that data high from the 8:30 news release long, and it ended up hitting in Asia session. So if you took this on prop firms, it wouldn't have worked, but regardless, stopped out short, started rejecting that midpoint of the opening range gap, and then shooting for a data high. So I'll just keep this so we can calculate the weekly result in percentage. So this was I just want you guys to see how much like percent you guys can get with this model, so you don't fear losing, because that was my biggest hurdle, was afraid of taking losses because I felt like my model didn't work or didn't repeat. And I'm showing you how to fix that here with a well-defined time-based model. If you apply risk and size the same, you have to be locked in with the risk management part to make it work. So that was Tuesday. It wasn't really a clean Tuesday for a red folder day, since our targets were hitting overnight in Asia, and then our next red folder was Wednesday. So this was like, okay, has to be the best move of the week because it's Wednesday. Thursday, Friday don't look too good, and we have 8:30, 10 o'clock news as well. So on Wednesday, overnight, we're bumping into a SIBI. 8:30 runs into this hourly SIBI. We filled this opening range gap from Monday, that's what this is here coming into Wednesday when we gap into this hourly SIBI. If I draw the quadrants of the weekly opening gap, meaning Sunday to Monday's open, we have this perfect rejection here from the upper quadrant. Notice the body staying below that. So 8:30, we're letting that trade and manipulate price into that hourly SIBI, filling in the new week opening gap. And then 9:30, I'm looking at what's happening here. We gap up, and at 9:30 we make a leg short. Notice how we're respecting the midpoint of the opening range gap and displacing lower at 10 o'clock. So that's this opening range gap lower. This was a discount fair value gap for 2022 model, and then the opening range gap midpoint is right around here. Bodies reject that, and then we make this first leg short for 2022 model. So go short there, stop above candle 1, and then I'll go to my hourly chart here. I'll get rid of that low. So we're getting short in here, the 10 o'clock candle, and we're targeting this discount BISI, the range. So it looks like that. And then notice how we come into this color outside the lines a little bit here, and then we just bounce right off of that. So whenever I have a trade in the morning, no need to trade the afternoon. So that was Wednesday, and it was the best trade of the week. So into Thursday, this is Thursday, we're closing below this discount BISI that we were looking at here as an inverse. So I'll draw the midpoint. So Thursday, we gap down, and we're not even close to the midpoint. So that tells me we're not going to go up here. We're just going to keep seeking lower prices. And notice how the wicks touch the lower quadrant. All in here, lower quadrant. We're inside of that inverse discount array. And we are also in a SIBI here. And within that 9:30 we displace lower, gap down, and I'm looking at this wick here for a premium array. So that's that wick here that I'm drawing the midpoint of. If we were to displace higher through this and we gap down like this on a different kind of day, then that's when I would flip my bias. So notice this wick rejecting the midpoint because that's the last line of premium array here. And then I'll get rid of this for now. So I'm not too interested in this long because it didn't break structure, even though this is displacement, and you could say, well, why didn't you break down that leg into the 3-minute, 2-minute, 1-minute chart? It'd have to break I'm only refining the entry if I get an M5 2022 model. That makes sense. So in here we're rejecting that, and then we have a very small 3-point 2022 model here. No pressure if you miss that because it's such a hard gap to see. And that's clearly in a discount, so no need to drop further. Entry there, stop above the high, target the edge of the leg for around 2R. And say you miss that and this leg wasn't too clear to you, well, that's when you can go in on the afternoon and, you know, clear premium short here, target that low. That's the next hourly drawn liquidity. Say it's 3R and, you know, that's too far away for you. Then you can go over here and refine, and there's these unbalanced internal range. Then you can target that for 2R, and that hits during Asia session. So that would be your prop firm trade. If you have a live account, you know, overnight we do end up hitting that hourly low, so take some off here on a live account and then leave some runners for that hourly draw. That's probably what I would have done. So that was Thursday. And then Friday, we have 8:30 news, 10 o'clock news. So I was really interested in the silver bullet this morning. So here is midnight. Massive gap down. So when we made this long in here, I was really interested in getting long. At 9:30, go to the daily chart. This was Friday. I was expecting like some kind of TGIF where if you have an expansion week, you're looking for it to retrace back into the range. So at Friday 9 o'clock, 9:30, Judas swing here. They're taking profit here, as you can tell by the wick. Taking profits in here, and then 10 o'clock, we displace here. We make this gap, so I can consider this entire leg long now because this is part of that leg. So if I take that low to that high, I was looking at this discount fair value gap, but it didn't hit inside my 11 o'clock window. So then I was like, okay, well, I'll see what happens heading into lunch and our afternoon window. And at lunch and 1 o'clock candle, we're sweeping this high. And here above midnight, and that's where this upper quadrant is. So we're sweeping that hourly high into a premium of the opening range gap, and then here's our silver bullet window around displacing around the midpoint of the opening range gap. So in here, same thing, small gap. You have to be really cautious or observant to find these. Lately they've been really small. So high to low, market structure shift, fair value gap clearing premium. Enter there, stop above the high, Now notice there's no M5 internal range to target, and this low down here is 4R. So that's when I'll go up to the hourly. Same thing, no discount internal range. 15-minute, get rid of that. That was that 4R sell side here. But above that we have this M15 discount in here. So short there, target this intraday M15 internal range for 2R. And also on the M15 in here, inside of that M5 long, we have this M15 SIBI. So that was the week. Had plenty of opportunity. I want you guys to understand how to use these two windows and the opening range gaps to help with a bias and how to flip your bias, because they give you a lot of information when you're in premium, when you're in discount. When you combine all these things in an entry model, it becomes very easy to time your setups. So just go over how much percent you would have had this week if you use this properly. 2.5% here on Monday, minus 1% short, targeting that hourly SIBI and these equal lows, and then we make a long in here, but that fair value gap isn't in discount, so you refined, and then overnight we hit 2.3, so I'll just add 1.3, and then best trade of the week, Wednesday, high of the week as our weekly profile. 8:30 manipulates into this hourly SIBI to the tick, rejects the upper quadrant of the new week opening gap into a premium. 9:30 makes a short leading into the silver bullet, nice short here into a hourly discount on Wednesday here. So short in here, that's also 2.3, I believe. Yep. And then Thursday, using that discount as an inverse, also rejecting the lower quadrant of the opening range gap. So this is an example of continuation. When we gap down, fail to see the midpoint, we use a lower quadrant, and then we're going to go seek lower prices. So use that premium array, had a small fair value gap in here. If you couldn't see that, no big deal. We had one in the afternoon. So target edge of the leg, 1.8. And then Thursday, I'm not going to count that because I was done Thursday morning, but that was clearly the best trade of the week. Thursday afternoon, I mean, running all the way down into that daily low. Thursday afternoon, all the way down to this low and these lows down here. And then that leads to Friday, gap down, displacing through the midpoint. That's why this long was interesting, because we didn't quite get above the midpoint, but when we have a nice leg like this, TGIF in mind, this leg here would have been a nice long. But that led to the afternoon where we swept that hourly high, made a new dealing range in here. And we had this short here in here, small gap, target that M15 internal range, which is near discount of the range. And as you can see, look how the bodies are rejecting that right now, literally to the tick, and the bodies are respecting the midpoint. So 1.9 on Friday. So that's a 10-hour week, excluding, this massive run on Thursday, if you didn't capture that. So that just goes to show, like, if you take losses, why would you care? Because it makes, like, the winners take care of it. So 10% week, I mean, most people want that in a month. So since we had that, I don't think we're gonna have crazy week next week because of the news layout. We only have one orange folder, so the market's gonna take a little bit of a breather, I'm guessing, and then just really waiting for FOMC the following week to set the stage for August. So that leads me to a little weekly outlook I can do for you guys for next week. Starting on the weekly chart, we took that low. I'll use previous week high, and below previous week, or this sell side, we have this volume imbalance and this fair value gap. So whenever there's a volume imbalance, I'll draw it to that volume imbalance, and then that's what I'm looking at here. We're inside of this. If I switch to IPTA 60, we're in discount of the range now, so we can sweep these lows and use this internal range to seek all-time highs. That's definitely a possibility. But if we get down into this weekly fair value gap, I'll be using this daily gap here as a target for the downside. And then this is previous week's high. And notice how we have this gap short, this SIBI here. So, it really depends on how we react around here. For me, to seek higher prices, I want to see a daily close above this fair value gap or this SIBI to seek all-time highs. But if we tap this next week and then we seek this external range low, then I'll be looking for this daily SIBI down here. So 50-50 right around here. Those are my two options for next week. Yeah, good luck and good trading. Hope that was insightful.